Picking the best expiration date for a cash-secured put option contract can sometimes be a challenge. Should you pick the longer days to expiration so that you can receive more premium? It seems like it, but is that always the best decision? Get my free course where I show how I generated income using covered calls. Just visit my website, coveredcallincomegeneration.com. Last week, while analyzing stocks to use for selling a cash-secured put, I decided to use Lemonade Incorporated, symbol LMND. But when it came time to select an expiration date, it was a challenge because I noticed that the premiums varied widely depending upon the duration of the option. So I wanted to share a quick method I used to compare premiums for different expiration periods. Now let's check the option chain for Lemonade Incorporated, stock symbol LMND. So press Trade LMD Options, and I'm going to be selling a cash secured put, and let's go a week out. It's actually probably a little bit more than a week out, so October 1st. And using the $68 strike price, the current premium price is $1.15. I created a small worksheet to help us understand and discuss the numbers associated with this cash secured put. So let's take a look at the numbers for Lemonade. So I'm going to input ticker symbol Lemonade, and this is going to have an October 1st expiration date. Strike price will be $68, and the premium being paid is $1.15. So at the last market price, Lemonade was at $71.71. With the October 1st expiration date, that would make the length of this cash secure put 9 days. And the amount of premium I would receive if this option contract gets filled would be $115. Now that $115, that would represent a 1.69% gain based off of the amount that I reserved for collateral, and that would be the $6,800. Now if we look at the amount of premium that I would get paid and divide that over the number of days for the contract, we can see that the premium earned per day is $12.78. So now if I select one more week farther out to October 8th, we can see that the $68 strike price has a $2 per share premium. Now let's compare this option contract with the first one. So again, it's for stock symbol LMND. It's going to have a different expiration date, right? It's going to be 1 week farther out, so October 8th. We're going to use the same strike price, $68. And the premium being paid for this option is $2. Now the numbers for this option contract, based on today's information, right? The current market price was $71.71. This option contract would be 16 days in duration. However, I would receive $200 in premium, which represents 2.94% gain based off the amount that I would have to reserve as my collateral. So right here you can see that the premium amount, right, I'm receiving $200 versus $115. So I'm making almost 3% based off of the amount of premium I'm getting paid, but it is for a longer duration. And so if we take that into consideration, how much premium am I being paid per day? Well, we can actually see that the contract with an expiration of October 1st, I'm actually earning $12.78 per day versus the option contract with the longer expiration, I'm only earning $12.50 per day. And by going another week out to October 15th, we see that the $68 strike price has a premium of $2.63 per share. Now let's plug in the new numbers for this next option contract. Stock Lemonade, and the expiration date is going to be the 15th of October. Now we're still going to be using the same strike price. However, the amount of premium that's being paid is $2.63. So based off of this information, the length of the contract now goes to 23 days, and I would receive in premium $263 when this option contract got filled, which would represent a 3.87% gain based off of the amount of money I'd reserved. However, that $263 based off of the 23 days of the option contract, that means I'm only earning $11.43 per day in premium, which is less than the other two options. And now selecting the October 22nd expiration date, the $68 strike price has a premium of $3.15 per share. Let's take this analysis out one more iteration and put in the information. So in this case, the expiration date would be October 22nd with a $68 strike price, and the premium at the time of this recording is $3.15 per share. So this option contract would be 30 days. So this is a 1-month option contract. I would receive $315 as premium when this option contract got filled. And that's a 4.63% based off of the amount of money that I would have had to reserve as my collateral. So given those numbers, that $315 divided amongst the 30 days duration of the option contract, that means I'm earning $10.50 per day in premium. So as an option trader selling a cash secured put, we need to look at these numbers and decide whether our priority for return on investment is the overall profit gain from the option contract premium, or is it more time sensitive and we care more about the profit accrued on a daily basis? So this isn't financial or investing advice, but my hope is to raise awareness among us option traders about the need to understand all the numbers going into an option trade. Now obviously there are many variables that can affect any trade on any particular day, including share price, volatility, trading volume, sector and industry conditions, and so on. So your numbers will vary depending upon your unique situation and the stocks you use. So the next time you sell a cash secured put, take a minute to analyze the numbers so that you can make an informed decision about which option to sell. If you like the information about my stock picks, then consider joining my Patreon, where I share exclusive videos of my stock picks every week that I'm going to be using for profitable trades. I also include my research notes, stock analysis, and trading strategies for every stock I pick to watch for that week. And of course, all my videos posted on my Patreon are ad-free. There's one last thing before I end this video. Now, making profits and generating an income from option trading is a great thing, but keep in mind that all gains made from trading are considered income and are subject to applicable tax considerations. So every month, I save a portion of the profits that I earned in order to pay for my federal and state taxes. So please consult with your CPA, licensed financial advisor, and or tax preparer regarding the tax liabilities for your unique situation. If you're still watching this video, I just want to say thank you so much. I really appreciate it. And I also want to wish you good luck and lots of success with all of your trades.